Come closer, ladies and gentlemen. Trade like a professional using our scanner. You don't need stress. Just very simple stuff and trade profitably using our scanner. All right, there are a few things that matters to a professional trader, when you trade. This is what this scanner care for you. Number one, professional trader cares about what they call market bias or daily bias. Number two, they care about the structure of the market. So purely price action. All right. So let's call it structure and trend. All right. Then next is that they care about PDRs. All right. So PDR is an area of interest. Then number next is entry model. Then they have aspects of probably trade management and all that. But let's look at these few things. Daily bias, structure, trend, PDR is the area of interest, and entry model. These are the most important things. Summary of this is that summary of the above is locating by cell. Have you seen that? That's all. That's all. So let's quickly take note of the following. Trading routine. We check fundamentals. For instance, we check are there news for the day. So you want to check news, right? You want to check news. Very important for you to check news. You want to know what's the prevailing things for the day, all right, for the week and all of that. You want to pay attention to understanding what's going on in the market for the day. Their macroeconomic news, all right? These are fundamentals. Now, next is that you're going to do what they call technical analysis. All right. So, but I call it remind yourself of your trading plan, position sizing, how many this year, and different things you are putting together, managing your trade. Then the next to do top-down analysis, the market execution, then trade management. So you look at it, that there are basically two rules. Please pay attention. Open your ears. If you're a subscriber of this scanner, every trade you enter, you must think about your target. And with a minimum of 1:2 risk reward, right? So that is, if I'm going to be $50 to be spent, so target minimum of $100. That's what we call 1:2 risk reward. Then your stop loss should be below or above immediate swing point. That is, a swing high, swing low, you find an entry, then your stop loss should be the swing high or the swing low before the entry you were taking. Then draw on liquidity to another. So looking at, I enter at this inefficiency and I want to exit at imbalance. Or I enter at this imbalance, I want to exit at this inefficiency. So you need to understand. So that is to say you enter at a fair value gap and then you want to exit at a swing high or a swing low that caused, before the gap actually was created. So you take an entry from this endpoint, you want to take profit at this other endpoint. Simple as possible. The solar reference areas and entry models. So I have other blocks. So I call it blocks. Other block, breakout block, rejection block, imbalance, fair value gap, liquidity void, then liquidity, internal, external, buy side, sell side, equal high, equal low, and all these different areas. Break of structure, market structure shift. Okay, so let's quickly go and simplify all of these using our scanner. All right, so here's our scanner. So if you're a professional, right? If you're a professional, what do you want to look at in the market? Basically, structure we have said. Now look at this scanner. What has it done for us? This is Bitcoin for that matter. This on daily time frame. So he has identified a sell point and a buy point ordinarily. So first of all, as a trader, okay? So first of all, as a trader, what you come to do, very simple. So let me just take off all of this drawing. That can help you. So this is a plain chart or a chart that had been delineated by the scanner for you to help you not to overstress yourself while trading. So now, when we come to the market, you're using a scanner. What to do first of all is to look at the daily time frame. So the daily time frame is that is the candle bullish. So yesterday was bullish. So you want to say that today should be bullish. That's how we look at it. All right. If today was bullish or yesterday was bullish, we expect today to be bullish. So yesterday was bullish against the previous day, then we expect today to be bullish. So now it means this market we expect to be bullish today. But it all depends on where the market first open and go. No, that's not even the problem. So let's quickly look at it. So if you find out about daily time frame, just to know the candle pattern and all of that. So we have a lot of instruments there. You can always check that way. You know, we have traded a lot of instruments and all of that. Let me use this one as a case study. So look at this one now. This is a currency instrument. So it helps a lot of beginners. So currency instrument help you so much. And so can always pay attention to it. So not to give yourself stress. So there, this was still actually bearish, but it looks bearish though, but that's actually bearish. So what do you want to do? You want to look at the candle daily. So can I find a particular one that was bearish or bullish? Okay, example, this one was a bullish candle. Here, yesterday swept liquidity, then it closed. No, didn't close above this, but inside the range. Today first came down and then was going on. So market is going to go up. So you go to 4-hour time frame. Now, 4-hour time frame, if you look at it, you find a signal to buy. Now, if you find a signal to buy, probably, so what do you want to do? It's very simple. If I find a signal to buy, it's not difficult. On 4 hours, please write it down. If I find a buy signal of 4 hours, well, what am I supposed to do? I will step down to 15 minutes. So for instance, you find a buy here. So I just want to mark it so that you can recognize that point. Please pay attention. 4 hours candle painted the buy signal. I go to 15 minutes to take the trade. Oh, yeah. So here we come. So you go on 15 minutes. So, but there's something that happened here. The 15-minute buy signal was not too powerful. And what do you mean by that? So why is it not too powerful? It's not too powerful. Number one, look at it. Your scanner. So your scanner say buy, but a long week, but this candle didn't close bullish above it. So it's not valid. But unfortunately, thereafter, a signal came up and then printed an engulfing candle. So that can form your bias of entry. So you take out a trade here. And now, so we said after that, once we have taken a trade there, very simple. So look at it here. Then your stop loss occur below the swing point, which is this. Then you're targeting 1:2 risk reward. That's your first assignment. Now, your first assignment is 1:2 risk reward. So you're going to use that one as a yardstick to calculate your position size. So how many was your stop loss? 34. So let's call it 35. Right? So let's call it 35. So what am I going to do? I go to my place to do my position sizing. You are trading with just $200. So let's look at it. $200. How much do you want to risk in trade? $5. 5%. 5% is going to be how much? $10. Okay, so then what do you go? What's your stop loss? Is 34, 35. So let's call it 37 or 38. So you click calculate. So it's telling you that you can enter this trade, but the lot size you can use 0.02. Be meticulous enough to go back to your entry positions, right? And then you are looking for how many? So you are entering the market. So 0.02 point something or 0.02. So you can divide into two, 0.01 in two places. So that first take profit you take here, and the next take profit you trail it. You wouldn't take the profit. You just allow it to be open-ended. It will be what? Open-ended. So that is the one you can trail. So as the market continues to move up over and again, you are now trailing the stop loss. So that stop loss that you are trailing will make you to have more money on that same positions. So, but if you don't divide it that way, the other way you can do so with the trade management is to be able to take some partial take profit. And that's going to help you, to maximize the trade. Do you understand? It's very, very important, but not everybody pay attention to that as much as possible. So you trail it. As the market continue to trend up, then you're following. So what does this trend line actually help you to do? It actually helps you to identify the trend is still up, and then look at the pullback into the 50. Then you find another buy there and all that. But let us not disturb ourselves so much about that. 1:2 risk reward, you have gotten that, you have a position, you continue to trail it. Very, very simple. Does that make sense? All right. So now take another instrument. So you can just get as much instrument as possible that way, right? All right. So this is an instrument too, like I said, about the market closing. All right. So remember that once you find a trade in 1 hour time frame, you want to go to 15-minute time frame to take the trade. You find a trade, you find a trade in 4 hour time frame. You want to go to 15 minutes to take the trade. You find a trade in 1 hour time frame. You want to go to 5-minute time frame to take the trade. Why going to the 5-minute? Why go to the 15-minute? For sniper entry, and that will reduce your stop loss lot. So example, you saw a sell here. Now if you take this sell, so I'm going to take and just mark it out. For instance, I go to 5-minute. So I go to 5-minute. Let's see, I see powerful entry. Okay, so you can see the 5-minute signal there. That will form your sell. And you find another sell here. You understand? And then you are taking positions. That's how simple it is to take trade with this scanner. You don't give yourself unnecessary stress. You can find your trade as easy as possible, unless you are not paying attention to simple instruction. Okay? So somebody will ask me, when should I take profit? 1:2, what's your first target? The second target, you can target those support and resistance region. And then you find your trade as much as possible. So, ladies and gentlemen, it's very, very simple, unless you are not paying attention. You pay so much attention, you will enjoy the market as easy as possible. So let's quickly do something. So let's go on daily time frame here. Okay. So go to daily time frame. Okay, so here we're on a daily time frame. What do you want to do? You want to see the market. So the momentum yesterday, market bought and closed bullish, but it didn't break above this. So the momentum may not be too big or favorable for the fast movement of going up. So now what do you want to do? You go to lower time frame, 4 hours. So in getting down to 4 hours, what do we find? We find the market at a resistance point. So would the market make it above the resistance point, or would you just avoid the trade? The last trade was here. Okay, so what do? I didn't find a signal to buy or to sell because this was already old. You step down to 1 hour time frame. Now, there's something very unique about this. This is 1 hour time frame. Now you find a signal to sell. But why do we say about structure? We talk about structure, and this 1 hour, the market was here, a break of structure, a high, a low, a swing high, right? That is a higher low. Now, this is market structure shift. If this market has shifted, that means this market have another block behind here. Okay? Okay, so here that is it. So now this is a market structure. So you expect the market to pull back for you to find an appropriate entry. Does that make sense? Yeah, it does. So for that, you mark from here to here. Now I'm doing professional traders, and you that just have to wait for your signal to print to you. So as it were, the market actually what? Now told you sell. So if you get those out sell, so you look at it and go back to 5 minutes. Very simple. So let's start back to 5 minutes. So going back to 5 minutes, you see the sell here, you have sold. Then you are targeting the market to return back to the breaker block or to get to the other block as the case may be. So what we have here on 5 minutes, the market got to the breaker block and we have a rejection. Okay, so we have a rejection. At that rejection level, it gives you a signal. So now this buy signal, you took it because you are at an area of focus. You took the trade, 1:2 risk was your first target, and then your stop loss below. And then that's what we find here. I'm waiting for the market to deliver the take profit one, or it will not deliver, as the case may be. So working with this, your scanner is a very powerful tool. Now going to Bitcoin quickly. Because I have a Bitcoin that I sold out. Let me show you something. So going on daily time frame, the market has traveled up so much, and I'm giving a sell signal. So let's go to 4 hours. 4 hours to give a sell signal. All right. So what do you want to do? You want to go to 15 minutes? You want to go to 1 hour to understand? So let's go to 15 minutes. So you can see 15 minutes give a sell signal, but not powerful. Not too that powerful. Okay. So what happened? We have accumulation, manipulation, and distribution. Okay, it closed. It closed. Oh, no, don't close. It didn't close it. So I want to go to 5 minutes. So those sell signals are not too powerful. You may not take the trade. But if you look at it logically, so this is sell, then you want to target. Now, let me show you something. So there's something very significant here on the daily time frame. This is the highest, previous high, and then the previous low. So these two together. So what do you have here? The market now traveled back here. So we have a structure. So you may not need to know all of this ordinarily when your scanner is working, right? But it's important because you need to know how to repeat the wheel. So it created a low here. Okay? So we have this. Then we have a structure here again. So this is a breakout structure. So it went up. So this one creates another internal high. Okay, so now you have this as a shift. Okay. So if this is shift, what exactly are you looking for? It took out this one too as an external shift to this internal. But it's an internal to this external. So you've gotten this. What exactly am I looking for? Very, very simple. I'm looking for the market to retrace back for me to find a buy, which means I'll be talking here, be waiting for the market to come down to this one. Indeed, that was a very fantastic entry. And that was what I've traveled to this point, we see. But there are a few things I want to pay attention to. Here, there is a fair value gap here. That means you should be able to say that, okay, market, if you get to that point, maybe to reject and sell. Secondly, this is a new breakout structure. Excuse me. So that means I need to pick out this swing low to this swing high. So if that's the case, I should be looking at this point as an area of focus. Are you seeing that? So I'm following professional trader and who we equally appreciate this scanner. And I'm equally educating non-professional trader who will see how this scanner can teach you and follow our mentorship. So now we have a fair value gap, but not into the premium discount. But let's watch how it's going to play out. Excuse me. You go to 4 hours. So here we are in 4 hours. Remember, you have marked all of these points as your point of interest for the market to come to. So on 4 hours, it's telling us to sell. And on 4 hours too, there's something you could still do, top-down analysis. What's the top-down analysis of 4 hours you could do too? So you can see that this is a breakout structure, because this is a swing high. So if it's a breakout structure that you have here, or into this one, so whichever way. So that means there is a swing point here. So this is a high, this is a low, this is a high, and this is a low, and a high, then a low. So that means I'm going to take a push up to this point, to this swing high. So that means this is going to happen, that we have an area of focus here. And so that means we have this as a fair value gap, which probably align with the daily fair value gap. Let's take this. If I go to daily, can you see that? That was that fair gap on daily equally. So let's go to the 4 hours. Okay, here we come. So there we come here as a fair value gap and on top of a support. So at the end of the day, if you look at it here, getting close to this fair value gap. So you go back to 1 hour time frame. And they're very lovely. Even though this does not close below this, but this is powerful, right? So you still boil down to this normal sell we're talking about. So that means the market is going to sell down. You're waiting for another buy. So let's go to 30 minutes. Lovely. So that sell continue. So you will have sold. And then, so that takes us to 15 minutes that you're supposed to be your entry. So look at it. And then this is a bearish candle. So to final bus stop, 5 minutes. So that sell continue from here. I'll start. Okay. So the sell continue. So what am I going to do? So I'm going to be targeting the sell to this point first. Okay. And then next to this point. Can you see that now? That's going to result to about 1:8 risk reward if you get there, but doesn't get there, no problem. Then that's what to do. So if you look at it here, this is a high, this is a low. So this is about taking out this low. Then if we take it out, it could return back to this fair value gap. Now, don't mind, it's a 5-minute time frame, so it can return back here. So instead of panicking, then you could look for another entry. Is that correct? That's one of the magic about this thing. And then this continue as much as possible. So BTC is a sell, right? You can see how powerful the market continue to behave. All right. So professionally, you learn the structure, all right? And at the same time, you so if you're a professional, if you're a professional, you are using the scanner to aid your decision and to help your trading movement. Lovely enough. Okay. And then we had the buy to okay. Oh, this one is almost done. Okay. It's the same thing that we had there, right? It's the same thing we have here too. Yeah, here we have this. I'm sorry. Not this. This. All right. So the same thing we have there, Euro USD. Let me quickly do that for you to see. So go to daily time frame. However, the market is bearish overall on daily time frame. Yes, it is. Overall is bearish. Overall is bearish. So ordinarily, the previous day, they asked us to buy. We'll have gone. So now we've come. This candle closed bullish. So you want to see the next thing that happened here. So whatever happened here, so you want to see. Okay? So we're going to 4 hours quickly. So in 4 hours, what do we have? So what we have for 4 hours is very simple, right? So let's look at 4 hours. 4 hours ask you to buy, but that was the previous day. So where we have here, we have this. Sweep this low, and then you expect this market to continue going up. Now, this market swept high here, perhaps this other block, because this is a breakout structure. So you should be selling. You should be bearish. Oh, yeah. So this is a breakout structure. And then you have a return back, and then this is a rejection. You should be selling, right? The next candle actually knew and actually closed below this. Okay? But it didn't give you a sell signal, your scanner. So you go to 1 hour time frame. But for professional trader paid attention and by looking at, oh, the market downtrend, all right, the breakout structure, this is the high, all right. So if there's a high, look at the high. So that means this is a high, and then we have the breakout structure. This structure broken. So you have to have what we call your origin. All right. So you have the origin, then you have a fair value gap. So what you expect is the market to come back to either of this. So the market, rather than coming into this, what did the market do? It creates another high lower than this. So since it created another high lower than this, so here is some mitigated. These are not mitigated bearish order block. Okay? So that's a non-mitigated bearish order block. So the market broke down. Then we came here. So ordinarily, once that has happened, failed to mitigate that, that would take my fib level to come to this point and drag to the high to envisage. So it came to the extreme. Now, professional traders don't trade that. What do? So they wait for the market to actually create a new low higher than this. It becomes a higher low. And then take out this high. So as you take out this high, break it, that becomes a market structure shift. So if it's a shift in the market structure, that's where you take your fib level to enter from this swing low to this swing high. And what do you get? So a few things happen here. You get your discount level where you envisage the market to come to. But watch something and see. Remember something here. This is a fair value gap. So it has been inversed, but haven't been inversed. Okay, this was inversed, and then we have another fair value gap. This will be a powerful entry. All right, IFVG. All right, inverted fair value gap. So that inversion is a powerful entry point that market's supposed to come to. But what happened? The market broke it, returned up, and all of that. There's something that happened here. This is a breaker block. Okay? This become what? A breaker block. Because why? It was not mitigated here. Then we break it above. That is a break and retest is what you want to call it. So it's a breaker block because it was a resistance before. Now it's turned to a support. You have the market travel up. So this is a confluence. And that's why sometimes you see your fair value gap not being filled. At a point, you become confused. What's happening? So the market travel back there. So this sell, you will have sold and make money. And how do you go about that? When they ask you to sell, so look at it because you have seen it, or then you come in here, say sell. That's the candle. Then you go to 5-minute time frame. At your 5-minute time frame, you actually saw a very nice sell. Yeah, so a sell, and then that's your sell, 1:2 risk reward. So you'll be targeting the breaker block, and at that time, and that's your breaker block, your support tool already rested there. So that means you are going to take profit here. Fantastic. Now, what happened to this point? It's not your business. Your business is that what's the market doing now? So at the end of the day, what happened? The market traveled to this point and created, this is a high, this is a high, this is a high because internal. So this is a breakup structure. Then the market created a new low. So that means this is a high. Okay, look at the high. Was I actually waiting for this high? No. Ordinarily, professional trader wait for this high, but that should be better in 1 minute, 3 minutes. So that means this high was broken and then was retested. Look at the fair value gap. So, but you that know what you were actually doing, when the market came here, you were already in at the close of this. That was why we entered here. So this is already done. 1:2 risk reward. That is using 5.7 to make how many? 11.7. So if this is your market, so that's, let's say, 6 pips, that we're using 0.1667. So once that is done, you are taking your profit. Then if you have more position open, you begin to expand them here and there. Those are the things. And that's exactly how you trade the market. So the scanner help you to identify spot areas where you can take a trade and all of that. But you have to pay attention to learn how to follow the trend of the market. So see a signal on 4 hours, you step out to 15 minutes to find a trade. You see the signal on 1 hour, you step down to how many minutes? Step down to 5 minutes to take the trade as simple as possible. So, ladies and gentlemen, this is as simple as possible how to follow your trade. I have a position running already on Bitcoin for sale because the signal was obvious. Okay, so that is what it is, ladies and gentlemen. There is no stress in this type of trade. You have a scanner that give you entry, exit, and all of that. Can you see that? This is very lovely. So what is happening now, like you can see, it's a pullback of daily time frame. And that was why your scanner gave you a sell. Does that make sense? Oh yeah, it does. All right, thank you very much. So you want to subscribe for the scanner? It's very cheap, $200 yearly. Then just message me at +234-90-470-44998. +234-90-470-44998. Or whoever sent you this video, just ask him how do you get started. For those of you who have got started, I'm sure message was gotten. So stop floating around. Just settle down, wait for your scanner, and then follow the necessary routine. And of course, if you are PBS members, that's why we're teaching you all of this to understand markets and why is it reacting. Our scanner does not react randomly. It's not a form of it's not a function of all of those maybe MACD, RSI, moving average. No. The purely price actions that work with liquidity concept, smart money concept to give you a perfect entry. So yours is to understand when is it valid and to take a trade, and when is it not valid not to take a trade. And so follow the rule, and then you enjoy the fruit. All right. So thank you very much, everyone. Do have a nice time. And my name is Flix. We're privileged to be the team leader of Plan B Express. Thank you very much, and bye for now.